Welcome to this episode number 71 of your next trade called today Biden-Trump bonds. So we are halfway in 2024. Stocks have been very strong, as we're going to see later on, the performances of most assets in the first half of 2024 have been pretty active, pretty strong, as I said before. But let's look at what happened over the last 5 days and what we think might happen in the second half of 2024. So on Thursday evening, we had the Trump-Biden debate post a pre-election in the US, and it's pretty clear that how Biden was reacting during the debate was not doing very, very well. So the first reaction of the market, if we look at stocks, if we look at the S&P futures, was for the market to say, okay, this is a Trump win, this is 100% sure reaction. So the market rallied on that. Then, what happened is actually we started to see bonds, we started to see yields. So here we are looking at the US 10 years, and here this is on Friday, as you can see. We went from 4.26% to 4.40% on the US 10 years. So more or less you can look at it in a different ways. You can say on first thing first that, that was the end of the quarter, end of the month. So very often what you're going to see is some rebalancing of some mutual funds, and what happened is probably some selling of bonds. So that's reaction number one. Reaction number two could be actually the Bank of Japan with the dollar yen close to 161 and pretty much saying that they're going to be acting again. They probably were or might have been selling some bonds just to make sure that they're going to be collecting a dollar. So that's reaction number two. And the reaction number three could see actually, it was so obvious that Biden was bad on the day that the Democrats will have to do something. So if you look at the odds, we saw the odds of Trump winning, like going from 50-60% to 80% on the day, because more or less it is clear that it was a big win for Trump. But that means, to me, it means a bit like a short-term gain, but long-term, I'm not sure this is gain for probably long-term pain for the Trump, because the reality is the Democrats will have to change. So more or less, what does it mean for the bond market? It is clear for both candidates that they will be running big deficits. We are talking 5 to 8% debt to GDP, which is a very high number. So what we're going to see is for the next 6 months or next 18 months is a lot of bond supply to finance this huge deficit. And even if that's the US, and you can say this is the best country on earth and every investor is looking to be long those assets, there is a limit to that, especially if you put a lot of supply into the market, because any market is about between supply and demand, the balance between supply and demand. And if you put so much supply with the deficit, that means the demand is asking for higher yield. So for the next 6 months, that is clearly something to be looking at. If there is a fatigue coming from the bond market, we had the PCE number, the inflation number on Friday, which were in line, despite the revise for the month of April a bit higher. So inflation is coming down a bit higher, as I said, on the revised number. But overall, I think the market is a bit giving us a warning on too much debt going forward. And as I said as well, be careful on making a huge reading on the end of the month, end of the quarter reading. So what about the first half of this year in 2024? You can see stocks in the US have been very strong. We are talking 15% for the S&P, 18% for the Nasdaq, only 1% for the Russell. So small and mid caps have been struggling. Why? Because as we have been saying over and over, the big caps, the FANG of this world, have been driving the performance of those two indexes. For Europe, we are talking single digit, 7% for the Euro Stoxx 600, 8% for the Euro Stoxx 50. Japan, very strong, 18%, but as you can see, so 18%, you should compare that with your 12% of the dollar yen. So dollar very strong on the year. We are talking between 3 to 5% versus most currencies except the dollar yen. So pretty much we have a strong first half of 2024, crypto up 50% and commodities as well, real assets very strong. We are talking double digits. So what about the week to date asset performances? We're not going to be taking too much time, but flattish for stocks. We are talking US, Japan, with the weakening of the dollar yen, we had the Nikkei strong on the week, up 2.6%, flattish for most currencies, down for the cryptos, and commodities trading sideways. So year-to-date industry performance, this one is really interesting because the S&P, this is your S&P here. So S&P is roughly here, as you can see, very few sectors outperforming, tons of industries underperforming. So again, and again, the market is driven by very few names. The market breadth is pretty bad. It's the Nvidia. This is going to be Apple. This is going to be Microsoft. This is for this week. That was the breakout of Amazon, which thanks to a lot of calls went from 193 to 200. But pretty much, if you've been into those 10 names, 20 names, if we are talking S&P and the NASDAQ, you've been making good money. Otherwise, you've been struggling. So week to date industry performance, interestingly, this is the S&P that is roughly here. So that is pretty much divided. So this week has been, we've seen a lot of dispersion between the winners and the losers for a market that is pretty much flattish. On the sectors performance, so the picture is the same for the first half. Telco, IT very, very strong. Yields with the real estate coming down. S&P 15%, as we say. And if we look at the week-to-date sector performance, energy pretty strong. And we've seen, S&P, as I said, flattish. So now let's look at the rates and what the rates market have been telling us. So 4.40% on the 10 years for the week. We end up 14 bips, so 0.14%. As I said, most of the move was done on Friday, not much due to the auctions of bonds. So we had several bond auctions with like 200 billion roughly of bonds coming in during this week. And most of those auctions went pretty well, but I think there is a fatigue on how much deficit the US can be running, and really going into H2. That is something that we should be keeping an eye on because there is a strong correlation. We have been talking a lot about we are all bond traders, meaning that the stocks have been following the bonds, and that's something that we should be keeping an eye on. Another thing that is interesting, so that is for the week versus last week. This is the 10 years versus the 2 years. So we have seen a bit of steepening of the yield curve between the 10 and the 2 after the debate. So again, something to keep an eye on. Bonds have been moving big, and that has been driven the other asset classes. What about the Fed funds target rates? 5.50 these days versus 4.99 that is priced at the end of the year. So 2 cuts. Market is pricing 2 cuts of 25 bips versus the Fed dots that are 25 bips. So a bit of more dovish views from the market versus the overall market. But as you can see, over the last 6 weeks, the trend has been more or less the same. What about volatility? Volatility very much compressed in H1 2024. We are talking implied volatility at 12.44% for the S&P 500. That will be the same with realized volatility that is really down for the 5 days, 10 days, 20 days. So volatility very much compressed. One of the strategy that has been a big winner has been to be selling straddles, that has been selling puts, so selling volatility over and over, versus some signals from the macroeconomy that are starting to tell us a bit different picture. So what about the technical analysis, starting with the S&P 500 futures? And what I do is I select the month because this is the end of the month, and as you can see, a strong green candle for the S&P. So pretty strong month. Same with the NASDAQ, but actually what you can see, we reached the trend, so a bit of topish, I think, for the NASDAQ. And if we believe that the NASDAQ has been driving this market, we could have a bit of consolidation going forward. Russell, not much of a direction, trading sideways. FANGs versus the rest of the world, very, very strong. Again, the trend has been the same. CL1, crude oil, copper, giving back a bit of performance. Gold, an interesting candle where there is a bit of indecision that is pretty much the same, with the silver coming back a bit. And then we get euro dollar, but this one is interesting, is dollar yen. So I've been trying to short the dollar, but with a very short, tight stop loss. Didn't work for this week. Actually, I was a bit too early. I need to be waiting for a real catalyst. But it has been a one-way traffic. This is one of the positions, the trade that I will be looking for H2. What about Europe? Still the trend is pretty good. DAX, as I've been telling you for weeks, this is probably the most interesting chart. So let's go back into what happened for the week. So for the week, we had the dollar yen momentum, so going one-way traffic. The second one was the bond auctions that we mentioned. Most of the bond auction did pretty okay, and the bonds reacted pretty well. We had the PCE on Friday, where the May numbers were in line, but the April numbers were a bit revised higher. So end of the month, so this is for the S&P. As you can see, this is the change that we had from 5 p.m. UK time, meaning the last 4 hours of the trading session in the US. And that is mostly due to bonds. So here we get the US 10 years, we get the futures, and versus the S&P that will be here. And you can see here that there has been a strong correlation. So as I said, bit of end of the month rebalancing that could be explaining that, the Bank of Japan, but I think as well this is a bond fatigue where when we go from 425 to 440, it's a big move, and I think pretty much many investors were caught offside on that day. So that will be something to be looking at in the future. Volatility pretty much muted, but I'm interested as well in what the companies have been telling us. So we had a warning, kind of a warning from L'Oréal on Thursday in Europe. 2 weeks before, Beiersdorf, which is a small L'Oréal, has been doing the same in Europe, saying, we should expect a slowdown in the consumption, especially from China and the US. And on Thursday after the close, Nike came with pretty bad numbers, where the expectations for 2025 are for the sales to come down. So you can say, okay, this is company specifics. This is pretty much because we are going into a new world, new marketing. It's much easier for companies to be competing with this Nike and L'Oréal of this world. My view is a bit different. Yes, there is part of it, but that tells you as well that the US consumer, that the Chinese consumer and European consumer are struggling. And if you look at the performance of Nike on the day, it was down 20%. It's pretty rare to see the market in the very early session to be up on the day when a stock like Nike, which is a consumer stock, is down 20%. So really what the retail companies have been telling us, and that's the same with Walmart. On Wednesday, Walmart said, we should expect a Q2 that's not going to be as good as the previous quarter. So there is a slowdown in consumption, which is true for most companies, but as well, if you look at the retail sales, as I flagged last week, retail sales in 2024 are down versus the December 2023. You can see as well that the spending that we had from the PCE on Friday was not that great. So US consumer is not feeling that well, and in the meantime, we get the market that is making new highs. So what about the catalyst going forward? We got on Thursday the US that is closed with the Thanksgiving, the 4th of July. So market will be closed. For Europe, we're gonna have the UK elections. And today we got the French election, and the market was a bit shaky, at least in Europe, and the spread between the French OAT and the German Bund widened to 85 bips. So that's something we should be keeping an eye on. The second round of election in France will be in a week time. So first thing first, looking at French election and UK election. Second one, a bit of macro with the manufacturing PMIs, ISM on Monday and Wednesday. So in the in the US, the numbers we are talking services have been pretty good, manufacturing as well. Not as much in Europe, actually a bit of weakening. We're going to have the Chinese number. So that's going to give us a 60 to 65% GDP world picture, but those soft data, but that is important. Then we got on Friday this big number, which is the job data in the US with the NFPs. The weekly claim, the work claim have not been that great and trading a bit higher. So the FOMC, the bank the Fed has been pretty much now looking not only at inflation but how the job market is doing. So look at FOMC minutes on Wednesday and what Powell and Lagarde will be telling us on Tuesday. But more recently, the S&P 500 has been behaving pretty okay, and that's an understatement on NFP days. And then I want to finish on what has been the seasonality, because if you've not been aware, this is the seasonality here for the S&P 500. So we are talking July here, and we are talking the last 23 years. In the month of July, the market, the S&P has been up on average 1.7%, so very strong months. And over the last 9 years, the S&P has been up, and you can see that there have been some big numbers. So seasonality normally is pretty much strong in July, and that goes against the some drivers, some catalysts that we have here with the weakening of the economy, with the bonds very strong. So we could have an interesting summer despite so far implied volatility, expectations of volatility pretty low. Part of it is explained by this short week, as we are talking only 4 trading days, but that's a move of 1.1% for the week. So overall, this is it for this week. We don't have much earnings coming. The earnings season will be starting later on in the month of July. So some catalysts, some macro catalysts, but mostly look at bonds and how the bonds will be trading, because that will give you some indication of the stocks going forward. For me, going forward in terms of this your next trade, I'm not sure that I'm going to be doing weekly videos because we are going into summer, and as a French, I'm a bit lazy. If you are interested for education, you can reach me, you can join us on the trading community. If you're very keen on me doing those weekly videos over the summer, one way to push for it is to put like some comments to tell me to do it. That could motivate me. Other than that, I wish you a good trading week, and I might see you or might not see you next week. That is it for the week. Bye bye.